So we have now reset the market back to where we were previous to that announcement. Okay, that's the good news. The bad news is that we are likely not done yet with the correction cycle that we're in. Here's what you need to know before the bell. So yesterday, this monster gain, largest since World War II, as I said, taking markets sharply higher. So we've reversed all of the losses going back really to where we were just last Monday, right? So we kind of wiped out all the losses post the tariff announcement last Wednesday. We've wiped all those out. So we have now reset the market back to where we were previous to that announcement. Okay, that's the good news. The bad news is that we are likely not done yet with the correction cycle that we're in. This type of reflexive route is very common in the markets, particularly when you're in a corrective cycle. We saw this during 2022 when markets began to trigger weekly sell signals, which, by the way, we got yesterday. So we now have that weekly sell signal in place. This rally is pushing back into previous support levels. So now what is happening with the markets is we are now going to challenge this resistance line of this bottoming process. The market was trying to bottom going into that tariff announcement last Wednesday. And again, the markets were expecting, hey, if Trump had come out last Wednesday and said, hey, 10% tariffs on everybody until, then we'll negotiate from there, whatever, this market would have rallied sharply, probably at that point, back towards all-time highs. Now, though, we're now challenging that broken support level. We also have the 20-day moving average sitting on top of this market from yesterday as well. So again, there's a good bit of resistance here that markets are going to have to deal with here, at least temporarily. That deep oversold condition that we talked about yesterday on relative strength. We said, relative strength was as deeply oversold as virtually it can get. Big reversal there. We reversed most of that relative strength oversold condition yesterday. So again, lots of fuel. As we said, hey, this market was set up for a rally. We had all the ingredients for rallying it. And then yesterday morning, Mike and I went into portfolios. We bought some Microsoft, Google, NVIDIA, Palantir, Palo Alto Networks. We bought some tech stocks yesterday morning because in the morning, the market was selling off, but those tech stocks were starting to hold up. We were seeing some money flows go in. So we added to some of those positions in our portfolio. Now, we did reduce healthcare yesterday. We did reduce AbbVie, which is one of our long-term holds. We reduced Eli Lilly because they have a lot of exposure to this Chinese tariff right now. So again, that's been under a lot of pressure. So we reduced a little bit of that, took that money, bought some tech stocks yesterday morning. So again, that rally, very helpful yesterday. But again, we're likely not done with this correction. So the next move in portfolios is going to be to go back through the portfolio, reduce some additional risk in the model, and again, kind of raise cash levels here a little bit and potentially start building a little bit of a short position. We'll see how the market kind of performs today. We're going to have a little bit of a pullback kind of out of the gate. That's fine. That's kind of what you would expect after a 9% gain. But again, likely we're going to see this market try to come back down here, retest or reset some level of low if the market is going to end this corrective cycle. Again, if we're not moving into a recession, which right now, again, we don't have the recession signals yet, but we are starting to see credit spreads rising. We are starting to see some weakness across the other kind of economic surfaces. So if we are going to head into either a much slower growth environment or a recessionary environment, which has the potential, then we're going to see earnings come down again. That's going to impact valuations. And so the market's going to have to do some more work here again. So we're likely not through this corrective cycle yet, even though we had this monster rally yesterday. Certainly good. This is that relief rally that we've been talking about that you can now use to rebalance your risk a bit in the portfolio. So again, take some action here. Yesterday's rally was good. It doesn't mean we're not going to get another day or so of this rally, but until we get through this whole cluster of resistance and really kind of back above the 200-day moving average, we're going to have some pressure on the markets near term, so trade accordingly. That's what you need to know before the bell this morning.